Welcome to Money Minds. Do you want to know the common investing mistakes that even billionaires avoid? Embark on a journey that navigates the intricate world of finance and investment. Our purpose today is to illuminate some of the common pitfalls in investing that could potentially derail your financial growth. We'll be exploring these errors through the lens of billionaire investors who have managed to steer clear of these traps, not creating and maintaining their wealth over time. This video will be a treasure chest of insights as we delve into topics such as the importance of long-term thinking, the power of diversification, the dangers of emotional decision-making, the significance of investing in areas you understand, and the necessity of brang. Additionally, we'll discuss the crucial aspect of adapting strategies to changing circumstances, a trait common among successful investors. These are lessons drawn from the best in the business, billionaires who've mastered the game of investing. However, remember that the goal is not to blindly replicate their strategies, but to learn from their wisdom, tailoring these insights to fit your personal financial goals and risk tolerance. Sit tight as we delve into the world of billionaires and their investment strategies. The first mistake we often make is not thinking long-term. We tend to get caught up in the frenzy of immediate profits, losing sight of the bigger picture. But long-term investing is a game of patience and resilience, a marathon rather than a sprint. It's about steering clear of the market's daily fluctuations and focusing on the potential of your investments to grow over years, even decades. Take Warren Buffett, for example. The Oracle of Omaha is known for his long-term investment strategies, often holding onto stocks for an extended period. His philosophy? Buy and hold quality stocks, those with strong fundamentals and the ability to withstand market storms. He firmly believes that time is the friend of the wonderful company, the enemy of the mediocre. So what's the lesson here? Don't be swayed by short-term gains or losses. Instead, consider the long-term potential of your investment. Look at the fundamentals of the company, its growth prospects, and its ability to deliver value over time. Remember, billionaires don't build their wealth overnight, and neither should you. The journey to financial success is a long one, but with patience and a long-term outlook, you'll be well on your way. Ever put all your eggs in one basket? That's a mistake billionaires avoid. Picture this. You're at a roulette table, and you bet everything on black. The wheel spins, lands on red, and just like that, you've lost everything. This is the risk you take when you neglect diversification in your investment portfolio. Billionaires, they know the game all too well. They don't gamble, they invest. They spread their investments across a range of sectors, industries, and asset classes. They might have a stake in technology, real estate, commodities, or even in emerging markets. By doing so, they're not just hedging against potential losses, they're also opening doors to multiple avenues of growth. Think of it as a well-balanced meal. You wouldn't just eat potatoes for dinner, right? You'd want some protein, maybe a bit of greens, and a nice dessert to top it all off. That's how a diversified portfolio works. It balances out the risk and rewards, giving you a taste of everything. So next time you're planning your investments, remember, don't just go for black or red. Spread your bets. As they say, don't put all your eggs in one basket. Diversification is not just about spreading risk, it's about maximizing potential returns. Billionaires know better than to let emotions dictate their investment decisions. You see, emotional investing is akin to navigating a ship in stormy seas without a compass. It's risky, unpredictable, and often leads to financial shipwreck. Take the case of an investor who gets swept up in the hype of a booming stock, only to buy at the peak and then watch in despair as the bubble bursts. Or consider the panic seller, who in a moment of market volatility sells off their assets, only to miss out on the eventual rebound. These are classic examples of how emotional decisions can lead to financial losses. In contrast, successful investors maintain a calm and rational approach. They base their decisions on thorough analysis and sound judgment, not on the whims of their emotions. They resist the urge to follow the crowd and instead stick to their investment strategy, even when the market is in turmoil. It's not an easy feat, but it's this discipline that separates the successful investor from the unsuccessful one. In the world of investing, emotions are your worst enemy. So remember, let reason guide your investment decisions, not fear or greed. Because as with any journey, the path to financial success is best navigated with a clear head and a steady hand. Billionaires invest in what they know. Do you? Now, this might seem like a simple question, but it carries a profound message. Investing isn't about jumping into the next big thing or following the crowd. It's about understanding. Understanding the industry, understanding the market, understanding the risk, and most importantly, understanding your own strengths and weaknesses. Take Warren Buffett, for instance. Known as the Oracle of Omaha, he's made his fortune by sticking to his circle of competence. He invests in businesses that he comprehends, and he doesn't shy away from admitting when something is beyond his understanding. Another great example is Jeff Bezos, who saw the potential in e-commerce long before others did, simply because he understood the internet and its capabilities. Ignoring areas of understanding is a common pitfall that inexperienced investors often fall into. They chase after glamorous, complex investments without fully grasping what they're getting into. The result? Losses, disappointment, and a shaken confidence. So before you make your next investment, ask yourself, do I understand this? If the answer is no, it might be time to hit the books, or perhaps look for opportunities within your areas of understanding. Remember, knowledge isn't just power, it's profit. In a rush to get rich, that's a mistake billionaires avoid. You see, creating wealth is not a sprint, but a marathon that requires one crucial quality: patience. It's like planting a seed. You don't expect it to blossom overnight, do you? It takes time to grow, and so does your investment. Take compounding, for instance. It's often called the eighth wonder of the world, and for good reason. When you reinvest the earnings from an investment, those earnings generate their own earnings, and so on. It's a snowball effect that can lead to remarkable growth over time. But the key word here is time. Compounding requires it. Billionaires understand this. They know that Rome wasn't built in a day, and neither was their fortune. They've learned to be patient, to let their investments mature, to weather the storms of market volatility, and to resist the temptation of quick, risky gains. So if you're looking to build wealth, slow down, take a breath. Because in the world of investing, patience isn't just a virtue, it's a wealth-building strategy. The market changes. Do your strategies. This question is pivotal in the world of investing. Sticking to a rigid strategy can be like trying to navigate a river with a map of the mountains. It just won't lead you to the right destination. Successful investing isn't about finding a one-size-fits-all approach. It's about understanding the dynamics of the market and adjusting your strategy accordingly. Let's take a cue from the billionaires. They don't adhere to a single, immutable strategy. Instead, they adapt and evolve their tactics based on the ever-changing market conditions. Consider Warren Buffett, who started out as a strict adherent to value investing principles, but over time modified his approach to include quality companies at reasonable prices. Or take George Soros, who made big bets based on macroeconomic trends, but wasn't afraid to change his mind when the facts changed. In the end, the market is like a dance floor that changes to a new tune every so often. If you keep waltzing when the music has shifted to jazz, you'll find yourself out of step. Adaptability is key to staying in rhythm with the market's movements. So remember, when the market evolves, your strategies should too. Flexibility in investing isn't an option, it's a necessity. So, we've covered some common investing mistakes that even billionaires avoid. What we've learned is that the path to financial success is paved with long-term thinking, diversification, and a keen understanding of your investment areas. Billionaires don't gamble with their wealth. They invest in areas they know well and can forecast with a reasonable degree of certainty. They understand that impulsive decisions driven by emotions can be a quick route to financial ruin. Instead, they approach risk with a calculated mindset, making informed decisions based on thorough research and analysis. Our journey through these lessons has also shown us the importance of patience. Rome wasn't built in a day, and neither is a fortune. It's the little steps taken consistently over time that lead to substantial growth. Just like a tree, your investments need time to grow and bear fruit. Lastly, we've learned the value of adaptability. The financial market is a dynamic, ever-changing landscape. The strategies that worked yesterday may not work tomorrow. Billionaires adapt their strategies to the changing market conditions and individual circumstances. They are not afraid to pivot when necessary, and neither should you. The key takeaway here is that these billionaire strategies are not exclusive to them. You can adopt these lessons and tailor them to your individual circumstances and goals. Embrace failure as a stepping stone to success, manage your emotions during market volatility, and continually learn and adapt. Remember, successful investing isn't about luck, it's about strategy, patience, and knowledge. So start investing like a billionaire today. That's all for today's lesson on billionaire investing mistakes. I hope you found it insightful and that it has shed light on some aspects you may have previously overlooked in your investing journey. I would like to thank you for spending your time with us today. Remember, the road to financial success is not a straight line. It's a winding path filled with ups and downs. But with the right mindset and strategies, you can navigate this path successfully. The lessons we've covered today are not just for billionaires. They are for everyone who wants to improve their financial situation. I encourage you to apply these lessons in your investing journey, and I believe you will see a positive change. If you found this video helpful and would like to continue learning with us, please hit the subscribe button below. We have more insightful content coming your way, and we would love to be part of your journey to financial success. Remember, the journey to financial success is a marathon, not a sprint. So subscribe and let's run this marathon together. Until next time, stay tuned, stay invested, and stay financially savvy. Farewell.